Greetings, members, one and all of the Salivation Nation. Why are silver prices increasing like they are? Let's explore! Probably asking yourself the question, why are they increasing? They've gone down almost 2% today. That's right, they have. And we're going to discuss that here momentarily. But overall, since March, silver prices have risen pretty dramatically. And they have squeezed the ratio of gold to silver from 125 to 1 to well below 100, at least for now. Let's talk about today's movement in the markets here, and then we'll discuss further on why silver prices have gone up and started to tighten that ratio a bit, and also why we shouldn't get too excited about it. As you know, I like to temper the excitement about it and where things are going, but we'll discuss some of that here. This article from Market Watch tells us gold prices logged lowest finish in more than a week. So gold futures fell Thursday to the lowest finish in more than a week, with dollar-denominated prices for the metal pressured as the U.S. dollar looked to recoup its loss from a day earlier. Investors also assessed the landscape for the global economy and markets amid rising U.S. coronavirus cases, while the European Central Bank, as expected, kept both its key rate and asset buying program unchanged. Bullion has been held in a range of around $1,800 as a rising case of COVID-19 in many American states undermine the economic recovery, while U.S.-China tensions are also rising. A surge in COVID-19 cases in the U.S. has made the situation a little bit more arduous because businesses are likely to lay off more workers, said Naeem Aslam, chief market analyst at Avatrade, in a market update. Weekly U.S. jobless claims data released Thursday showed a decline of 10,000 to post-pandemic low of 1.3 million, though the small decline points to an ongoing stress in the labor market. Retail sales, however, climbed 7.5% last month to a record 18.2% rise in May. Aslam referred to the latest batch of economic data as okay news, not great news. The fact is that things have started to stall, he said. So gold for August delivery on COMEX fell $13.50 or 0.7 to settle on $1,800.30. It's actually lower than that now. After adding less than 0.1% on Wednesday, the settlement was the lowest for most active contracts since July 6th, according to FactSet data. September silver fell over 1.4%, meanwhile declining 19 cents or about 1%. And so the moves for the precious metals came even as equity markets globally were in retreat. The U.S. dollar, meanwhile, was trading 0.2% higher on Thursday's dealing, as gauged by the U.S. ICE U.S. dollar index. It was up 0.25%, following a similar climb a day earlier. Early Thursday, the European Central Bank's decision was seen as giving the central bank some time to assess the impact of its policy moves before embarking on any further stimulative measures to prop up economies stricken by business closures and restrictions to help stem the spread of the pandemic. While central bank policymakers will have an easy rest of summer, government leaders from the U.S. and Europe will need to deliver their own fiscal responses, Edward Moya, senior market analyst at Owanda, said in a note. Gold's best friend has been stimulus, and there will be no shortage of that soon. ECB left its deposit rate at minus 0.5% and its refining rate at 0%, and said it would continue net purchases under this asset purchase program at a monthly pace of 20 billion euros. Together with the purchases made, the additional 120 billion euros temporarily envelope until the end of the year. And so, meanwhile, investors look to developments tied to China to help gauge demand for gold. China vowed to retaliate after President Donald Trump ended Hong Kong's privileged trading status in response to its imposition of a sweeping national security law on the territory. China's foreign minister said it would impose sanctions on relevant American entities. The New York Times reported that White House was considering summarily revoking the visas of China's Communist Party leaders. So there you have that. So that's news that is going to prove to be bullish for, I think, both precious metals. But again, we're looking at what's going on here with the markets. I believe this dip is also, they're not talking about in that article about how, these people are taking profits. Normal profit taking is another aspect too, with what's happening with these metals going down. But you can look, just as is usually the case now, the volatility of silver is rearing its ugly head in this case because it's took the biggest drop of the day at almost 2%. Still, it's above $19 an ounce, and that's good. But if we have a couple more days like this, if gold continues to fall at the levels where they are, silver will drop probably even more, widening the ratio between gold to silver. And that has been the case over the last 10 years. It seems like that silver has been very much more volatile and performing less than what gold has. And that is something to keep in mind and consider in your portfolios out there, for sure. But I do consider this a dip that is temporary, and I believe both metals will go up again. The only metal to perform in the positive direction is palladium today. Moving ahead, this is an article that was shared with me by Chuck and Plata, and it says why silver prices are exploding. Now, I'm not going to use that term, but if you want to be fair with the spot price of silver since March, the actual spot price was below $12. And so it has increased by 60% since March 2020. But that's not saying much in my mind because of where it is compared to gold. And that is a metric in my mind that does matter, especially in terms of being risk averse. And I believe in being risk averse in terms of the actual stacking of these precious metals. Yea, though, I'm more of a collector. But let's talk about this because I think this article brings up some interesting points that could lead to potential increase in the price of silver to come in an area that really is a lot of speculative nature, but in the delivery of silver and the COMEX contract. Goes on to say here the price of silver has gone up astronomically. I think that's a stretch too, especially when you compare pre-COVID levels. It was selling for just about $12 per ounce on March 19th, but as of July 14th of this year, the price is over $19 per ounce. That's a price increase of almost 60% in less than 4 months. What accounts for it? The answer is simple: physical demand. And that is also relevant in the premium increases that we're seeing out there. The price has only exploded as a direct result of an explosion in physical silver demand. As Marcus Dunlop, the evil genius who designs market manipulation software in the thriller novel The Synod, might have said, overwhelming physical demand will always defeat any commodity price manipulation if there isn't a minimum percentage of the commodity to back it up. Thus, if, as many believe, silver prices are being suppressed, the things that are happening now will make continued price control impossible. And you know my feelings on manipulation. On April 30th, 2020, the open interest of the number of contracts for future delivery of 5,000 ounces each in COMEX silver futures maturing in July 2020 was 99,406. When those contracts matured on June 29th, if circumstances had been normal, we would have seen something like about 1% or less of the contract holders demanding deliveries. Short sellers would have reasonably expected to deliver about 900 contracts, or a total of 4.5 million troy ounces. Obviously, that's a lot of silver, but it doesn't compare with what is actually happening. So far, as of July 14, 2020, short sellers have already delivered 13,919 contracts. Multiply that by 5,000. and over 2,418 July contracts are still waiting to be delivered. There is also an unusually high level of same month delivery contract purchasing in all the precious metal futures contracts, including gold, silver, and platinum. That means, in all likelihood, the final number will probably far exceed 16,337. But let's be conservative and use a 16,337 total for purposes of our analysis. So if each contract represents 5,000 ounces of silver, in July, a total of 81,685,000 troy ounces of silver will have to be delivered. Let's reiterate that we are talking about here about COMEX and COMEX alone. We're not considering the increase in demand of physical silver that is happening in China. We're not talking about physical deliveries at the Shanghai Gold Exchange, nor about the consistent physical demand that always comes out of India. Just the July delivery demand at COMEX will amount to 2,541 metric tons of silver. Total 2019 world production of silver, which according to Statista was 27,000 tons. In other words, in one single month at one single exchange in New York City, that was once a purely paper-based market. Long buyers have demanded fully physical delivery of 9.41% of the entire world's silver production supply. The traditional centers of physical silver demand continue to demand silver as well. For example, since January of 2020, India's silver jewelry manufacturing exports increased from $832 million to $1.7 billion, a whopping 104% increase. Most of India's jewelry exports go to Hong Kong and China, indicating that in spite of COVID-19 pandemic or because of it, demand for silver jewelry in the Middle Kingdom has dramatically increased. Perhaps that is also true for the demand for silver in the form of bars of bullion, just like what is happening in the United States. Unfortunately, this is very important, as with everything involving China, hard and reliable numbers are very difficult to come by. But the open interest in COMEX silver future contracts maturing in September, which is the next major delivery month, is currently at 140,262. The similar percentage of buyers demand delivery, a little less than 23,000 contracts or over 3,500 metric tons of silver, will have to be delivered. No amount of price manipulation can conjure physical silver out of thin air. So can you imagine the fireworks that will be on display in September as desperate short sellers run around the world, desperately trying to source silver bars to somehow manage to deliver 3,500 metric tons of white metal in the COMEX? It'll be quite a sight to see, and may result in a dramatic increase in silver prices, given that the short sellers have already used up a great deal of the readily available supply this month. But that's just it. Will it ever be tested, to that extent, 1% of the COMEX? My hope is they will. Demand the physical. Let's prove this theory out and see what happens. And I'm of the mind that I believe there is enough supply to meet demand, at least enough of it, but it's not true. Let's truly test this thing out and see what silver's out there. I mean, the fact that you and I can go to any bullion dealer and order some silver. Now, I know there's a shortage of bars and things like that. All the major dealers out there, they don't have any deals out there. They're severely lacking in a lot of different product. We've seen that from several different channels have showed this, looking at different dealer websites and things like that are out there. There's not as much out there these days to choose from, but there is silver. It's coming through. And we'll see if this thing does really pan out to be the case. Then yes, we could see an explosion in price. But I think we're going to need to see increased demand on our side as well as what's going on. Because, yes, premiums are higher. A lot of us are fed up with the premiums. A lot of us have different feelings on why the premiums are high. I'm not one of those that blames the bullion dealers. In fact, International Stacker posted a great video talking about that, and I've talked about it ad nauseum on my channel as well. Why these premiums are so high and who's to blame for it. But nonetheless, it's just something we've got to keep in mind, and it's going to take a lot more demand than more of us getting fed up. But there's people in the community out there. I know of several, including the one who sent me this article, Chuck and Plata, who's trying to sell their silver out there. And you got to be careful selling between private individuals, but nonetheless, there are some very trustworthy people out there that are looking to sell their silver, and so those who are looking to buy it at a decent price, seek it out and find it. But who knows? The price could go up. But the thing is, if you can hold on to the metal and see what happens over the next month through September, it might not be a bad idea. So there you have it. So thanks again to Chuck and Plata for sharing this article with me. Very fascinating indeed. And would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.